Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. As always, before we jump into it, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, so the charting software, the broker, the strategy I'm following, and so on, everything is linked in the video description down below. And the one thing I recommend that you check out is the Elliott Wave principle, which you can read online for free if you're or when you're using the link in the description down below, or you can use the same link to get a physical copy as well. Now, with all of that out of the way, let's jump into it. Today we start slightly red into the day. Let's hide the message. Yeah, not much that moved. We're gonna check. I guess GameStop moved a little bit or not. Yeah, so we're talking about cents here. Yeah, let's just jump into Motive Wave. And what do we have open here? Costs. Okay, costs right now, basically, like we covered yesterday, it looks like we have a wave 1, 2, where we would expect our wave 3 to terminate at the 2618 expansion level or potentially higher, because we also have a potential smaller wave 1, 2, and then wave 3 here that already shot through the 2618 and also through the 3618 level, which means it's possible that this movement here brings cost to this area here, the 4618 extension level, from which point we would get a wave 4 and then a wave 5. So that would then only be this subwave here. So again, we have the big wave 1, 2, and then we are in the progress of this third wave, unless I mislabeled something else, but that's the current assumption. And so that third wave should take us potentially to 11.58 to potentially $12 per share. Then we get a bigger wave 4 and then a bigger wave, or then the final wave 5 here. But we'll worry about that when that happens. So market opens in, I don't see the time. Now it's there in the corner somewhere, in a little bit more than a minute. We'll see. It's possible that the wave 3 here, so that 1, 2, 3 terminates here, but considering that we gapped through this, I expect it actually to make it a little further before we get our bounce. We get our wave 4, and then we get our wave 5 for more upside here in cost. Do we still hold? I think we still have 1,000 or so in cost, so not that much. Yeah, so we invested 1,000. It's right now worth obviously less than that, so we're at a small loss. Got in a little too early, but that's okay. I assumed that the corrective pattern was done here, when in fact it turned into a bigger corrective pattern potentially. Overall should still be a decent trade. The long-term outlook would be right now, if that is indeed labeled correctly, that cost goes to 17 or at most around 32 per share. We'll see if that happens. Now, circling to GameStop, GameStop is still in a sleeping mode, so slightly downwards, or it actually was slightly creeping upwards. Now we're correcting a little bit down. As said, I've said it the last couple of episodes already, in GameStop, I am not 100% sure. Either we already finished the corrective wave down here. However, considering that we have two different, let's call it indicators, that provide a target area at around $15 per share, I actually would expect that we'll get another push down to that $15 mark to complete the correction before we continue our journey up, which is a little bit bad for my current positions and really has a deep impact, or a noticeable impact, on my weekly earnings, because we currently hold 500 GameStop shares that we got assigned through $30 put options, which means theoretically our average here is $30 per share. If we consider the premium, then it's 24. And if we consider all the premiums earned from GameStop, it's somewhere around 16 or 14. So either way, that's there to consider. Now, markets are by now open. I should really move my microphones. All right, there is a timer upstairs. Yeah, so markets are now open. So let's circle for a second back to cost to see if we get any substantial movement here. Nothing super surprising. So we are now on a 4-hour chart anyway. Yeah, so I said possible that we get a little dip here and then finish the wave 5 into the area here, or it's also possible that we don't get the dip here, we just push till here, then we get our corrective pattern a little bit lower, and then we get the next wave up. Yeah, so not much else to say about GameStop. We just wait, kind of like poking it with a stick, to either prove me wrong in quotes and make this a wave 1, 2, and then a strong wave 3, or prove me right by first having a like 5-wave development downwards that then continues with 5 waves up, or prove me completely wrong by doing something completely different. But like we'll see how that plays out. Now looking at SPYs again further up, we already know we're not yet at our profit target. The profit target would be 566 to 572 for that wave. And there we would then expect to get a corrective wave ABC that at least like retraces a little bit before we then get a final 5th wave for obviously a new all-time high. I mean, the all-time high we already will have sooner. NASDAQ. Yeah, I'm gonna have a sip while it's loading. Same thing here. We're waiting for it to reach the 20,375 to 20,700 mark or to complete the potential wave 1, 2, 3. Then we'll should get a wave 4 and then a wave 5 for also a new all-time high. NVIDIA, let's see where we're there. There we're actually at the 2618. We broke through. It's a tough choice here at this point. It's either possible that we finished wave 3 here. I don't like the fact that we don't that we actually broke through, although the retest didn't hold. So it's very likely that this here will now be our wave A, B, C that retraces a little bit. If that here would already be wave A and wave B, then we would roughly ballpark it down to 120, a little bit higher than that, until we then get our 5th wave. It's also possible that this is already completed as an ABC. So right now we're exactly at one of the points where we could theoretically take profit, although the overall target is much higher because we have here wave 1, 2, potential wave 3 end, which would then bring our wave 4, which could have already finished here or develop a little further, and then we get a push for wave 5. And on the bigger scale, we see that we have wave 1, 2, and the wave 3 target is actually 134 to 139. So if that is already 1, 2, 3, 4, wave 5 should push us into the area here to complete then this 1, 2, 3, and then we get another wave 4 and another wave 5 for yet another all-time high that nobody knows, or I mean, I at least don't know how the fuck it's possible considering how overvalued the stock is, but that's what the pattern tells us is going to happen. Or at least tells me. Again, make your own decisions. Don't bet your house on it because I see a pattern that you might not understand or not see there. What else can we check out today? Faraday futures is still declining, which is a little bit of a pity because we actually had the overlap here yesterday nicely. That was yesterday, yesterday we were still in the area. So to on one hand have the 100 or 61.8 expansion level, and on the other hand have the 78.6 retracement. So to serve as a potential turnaround point for the next upwards movement. The pattern is still valid until we go to 152.40. If we break that, then there is no valid pattern, and then whatever investment we have or I have in Faraday futures will likely be a write-off long term. And now Grab, how's Grab developing? They had their earnings. Earnings didn't really move a lot, so we're still waiting. Okay, there we have one leap call, so a leaps call that expires in 26, so still quite some time for it to play out. Novavax, there we are waiting. It's going to take, we're looking at the daily chart, so it might take another couple of days to either break from break or bounce from this deceleration trend line, or break through and actually confirm that we're in wave 5. Now, if we are in wave 5, the profit targets would be at $29 to $62 per share. And so that's that. Anything new or no, still around 30 cents. So I think it's going to be interesting in the next couple. we have a weekly chart here. So in the next couple of weeks to see if we either manage a breakout, or if what I think will happen actually happens, that we'll get another push downwards and break through the 0.20 level. Immersion. Oh, interesting. There we had a spike, which may actually already be the confirmation that we were waiting for, that we indeed finished our wave 4 here. With that, our targets for a fifth wave should be, let's just check what's the low here, 952, and that one was lower, 950, yeah. So our targets for the fifth wave here should be $15.25 to $20.44. And this should then play out as a 1, 2, 3, 4, 5 to either of those levels. Based on Kennedy channeling technique, we see that we have the middle. We actually touched the middle here, but we did not recover the, or did we? So fifth wave has to recover at least 61.8% of what was lost. Yeah, we actually recovered that. So, okay, so there is it's unlikely, but there is the rare situation or possibility that we actually terminate our fifth wave here. I don't think that's the case because we'll need 5 waves also in here. I think as said, there will be more development to reach the usual minimum target here at least. But yeah, I'll have to keep an eye on that. I don't think we have any positions in immersion. Oh no, we have an astonishing 10 shares right now, so also not really a lot. And yeah, we'll just have to see how that plays out. That spike up here, we're going to actually clear our local data to reload it. Yep, actually happened according to our data source. However, points towards my previous analysis being right, that marks the end of wave 4 and that we are now in the progress of wave 5. And with that, we move on to Barnes & Noble, still creeping along slightly upwards and sideways. I mean, the perspective is skewed because of the huge price difference that we have here on the chart. But yeah, like looks like we are in the next impulsive wave pattern. So that might be wave 1, 2, and we're about to get wave 3. That we really need to move even further to be sure of that. So that's Barnes & Noble Education, by the way, so not the same as the regular Barnes & Noble. Yeah, like our stocks of shame, let's call them that, SunPower and GreenWave are still just dying. We'll see if they eventually get positive news and turn around, or if that will be or are going to be write-off positions. It was quite nice. I mean, there was a point where it appeared like a pattern starts to develop. So like 1, 2, potential wave 3, and then that just got invalidated. In retrospect, I have to say I should have probably just put a stop loss at the point where the pattern becomes invalid, but then also the amount invested was relatively little, so that it's kind of like not mattering that much. And the same here in SunPower, we also had a 1, 2, 3, 4 or potential 1, 2, 3, 4 pattern that then just also died here. Again, a stop loss here would have made sense in retrospective. But either way, I think we'll just sit this one out. Either those companies die and it's a small write-off, or they eventually recover. Again, the amounts are not big, and while they are, in quotes, in the process of dying, we also earn interest from people borrowing shares to profit on the decline. We actually can check. I haven't done that in a couple of days, but if we check for yesterday, just a second, opening up a report on my other screen. We'll bring it over in a second. So daily, yesterday view, there we go. So we can check the stock yield enhancement program. And we see that GreenWave costs and SunPower were lent out, and costs with only a 40% or 42.64 interest rate, whereas GreenWave and SunPower actually have around this one here, 136 or almost 137% yearly interest rate for borrowing the shares, and 120 for borrowing the shares, which is quite a lot. I mean, it doesn't make up for the drop in the value, but it gives us at least a little income while we are holding the shares. And either said the companies turn around then and have positive development, or it's anyway going to be a write-off. And that's going to be that. Now, we covered GameStop, GreenWave, SunPower costs, Immersion, Barnes & Noble, Faraday Future, same thing. That leaves us with NEO, although there we also only have a very, very small position. So not super relevant. With NEO, we actually at a spot where either I think that will turn out to be wrong. What's our exposure there? NEO, an astonishing $100. So we're just also gonna hold it long term. But based on the pattern, it's the same situation that we had in No, where I mentioned because we broke through the 78.6 retracement and got so close to already invalidating the pattern, I expected that eventually it will invalidate the pattern. And if we look at NEO, we have the same situation here. We had here what could potentially have been wave A, B, C, and then a move up. And theoretically, we could have placed the stop loss here already, but that would have been too early in my opinion. But the moment we broke and rallied through the 78.6 retracement, just becomes more likely that we actually are looking at something like 1, 2, 3, 4, 5. A, B, C, and then we get the next 5 waves downwards or so. But considering the small size of our position, we're just going to hold on to it and see how it plays out in the long run. And that only, that leaves us actually with not much. We looked at everything that's relevant. Yeah, and if there are no questions and no requests to look at other assets or stocks, I think with that we can already call it a day. It's been, in terms of performance, obviously, I don't know, like a boring month or a slightly disappointing month. Gave up. So I can actually look at that. So full transparency here. So we had I had a great start switching to Interactive Broker in May. So that's when I officially switched. And we made it up till here, as you can see. Plus you can add the 12% from here, because that's basically just for paying the monthly fee for the data feeds. And then we gave up a lot of that during the last couple of weeks. Still overall a good performance with a little bit more than 30% for the year, or for since May actually. But obviously there, that's actually our assigned GameStop shares. So we got them assigned at 20, and then obviously they declined in, or 24 technically, or actually at 30 minus the premium, blah, blah, blah. And that's the decline that we have here. So yeah, where we gave a lot back temporarily, and we'll see how that plays out in the longer run. So far, still okay performance, but we also see that here we had initial faster growth because we sold put options. Oh, I have to scroll a little bit there so you see it better. Because we sold put options with high premiums, whereas now currently we get hardly any premiums. Last week we got $75 for writing covered calls against our 500 GameStop shares. This week we got an astonishing $27, $28 for writing the same calls. We need a little bit more volatility in GameStop. That would definitely have a huge impact on our portfolio. Ideally, volatility to the upside, of course, because then the shares increase in value and we get more premium for selling the covered calls. But there is only so many things we can influence. There's no point, in my opinion, to close out the GameStop position, because I'm really confident that the shares themselves will eventually, within a reasonable amount of time, so not years, but weeks or months, we should see the pattern play out. So if we circle back for a second real quick. So we saw that here we were in April, from April till potentially June. So in 2 months, we have that potentially finished. Now June, or that's actually, yeah, June, July, August. So potentially 2 months until we had that finished, if it's already finished. Or another 1 month, maybe till middle, end of September, if we get another push down to finish this one. And then basically another couple of months to develop the next wave pattern upwards. So either way, while it short term is frustrating, or yeah, like just doesn't look that good, I think long term it's fine. It's also one of the reasons why you should never invest money that you cannot afford to lose, because then you might get into a situation where you make maybe not a bad call, but like something that just doesn't play out as you want it, as fast as you'd like it, and then you might be forced to actually take the loss. Whereas if your analysis is still the same and you don't need the money at the moment, you can just wait it out if it has to be. Yeah? Anyway, as said, with that, we're going to call it a day. So since there are no requests, thanks for stopping by. Don't forget, if you haven't already, like, subscribe, enable notifications, and we're going to see each other then tomorrow, 5 minutes before the market opens, roughly, again, for another episode of Daily Market Mastery. Thanks for watching. See you then.